Hi, this is Mark Gordon with GoldenTicker.com, and I wanted to show you an analysis of the last major bull market. And it started here in early 2003 and ran up till it peaked here in late 2007 before we began this nasty sell-off that we're in the middle of now. Now, here in the early part of '09, we have a nice sizable rally here on the major indexes. In fact, the NASDAQ is up about 40% off the bottom as we speak right now. Now, is this the start of another major bull market run? It's hard to tell right now, but what we can do is take a look at what happened in 2003 when we started the last one. You can see here on a monthly chart of the NASDAQ that we made some lows down here at the end of 2002. And then the market took off and then failed again at the beginning of 2003 and pulled back pretty sharply here. And then the market really took off. So let's take a closer look at what really happened. Let's examine a daily chart of the NASDAQ for 5 months beginning in early 2003. You can see that the market rallied up at the beginning of the year and then failed. And you can see the heavy volume selling that came in by these red spikes here. And that's institutional selling on the way down, which is what you don't want to see. We made a low here in mid-February and then rallied back up, but there was no real heavy buying, as you can see, and then pulled back, but not a lot of heavy selling. Most of these red bars are below average volume. And then the market actually came down and undercut this previous low here, making a double bottom. And then you see some buying come in. See these big gray spikes? Those are up days on big volume. And the market confirmed here on the 4th day. So we now have a confirmed rally. And the market went up and rallied up and then pulled back and then took off again. And you notice here that there was some real buying here coming in April.
And looking at more subtle clues with price and volume action, we can see here the big gray up spikes of the initial push up off the bottom here and confirming the rally. And then you'll notice here that when the market pulls back that the volume is generally light. And then you get some more buying coming in here in late April, pushing the market higher. More volume following through here in May, still pushing it higher. And then on the pullback you'll notice that the volume recedes. These red bars here are the selling days, and they're actually declining. And then you get a big push of volume, a lot of gray bars there, and you push back up through June. You pull back in late June again on lower volume, and then you start to run up again on increasing volume here. So this is exactly what you want to see as a market moves higher. Now, as you come into the summer months, which are generally slow for the markets, you get a pullback here, and you notice that the volume is fading here. And then here in early September, you get a big push of buying, which sends the market back up, and then you start to see some selling come in. See these big red bars here? This is some institutional selling, so the market's getting a little bit wavy here, but a little more buying comes in here. Nothing too serious. Market's still grinding higher, but not at the pace it was earlier in the move.
And I want you to notice here, from November on, there's not a lot of buying coming into the market, and you can actually see the volume start to fade out as the market just kind of goes sideways here. One of the clues that the '03 rally would lead to something big was that there were a lot of very strong stocks that had fundamental and technical strength building, and one of them was eBay. And eBay was actually rising as the market was selling off in late 2002 and into early 2003. And you'll notice that February was a tough month before the markets took off, and eBay gave up very little ground here, which is a good sign. And you can also see that the volume was very light. So eBay just kind of dragged sideways as the market sold off heavily. And then in March, when the markets broke out, so did eBay. I want to also call attention to the fact that on the way up, eBay never broke its 50-day moving average, this blue line here. So amazing strength. It actually acts as a springboard to the really powerful stocks. As it comes down and challenges the line, buying comes in and sends the stock right back up. Another great stock of the '03 bull was SanDisk Corporation. You can see that SanDisk sold off with the general market here, but then went quiet, kind of drifted sideways on light volume. And then when the market confirmed and took off, so did SanDisk, but dropped back here into a handle. Here's your cup, here's your handle, and then blasted out when real heavy buying came in late April. and then went up for better than a threefold gain. Now, a lot of investors may have gotten scared as SanDisk dove on heavy volume here for a couple days here in August, but it did not slice its 50-day moving average on heavy volume, so I would have held. I would have sold SanDisk here as it sliced this blue line, the 50-day moving average, on heavy volume. So a huge move for SanDisk. Another great monster stock that set up and broke out right with the markets here is Netflix. And Netflix debuted here in the spring of '02, and unfortunately for Netflix it was the wrong time of the market, and it quickly lost a lot of its value, went down here to $2.42, but set up in a nice cup here and then put in a handle and broke out right with the general market and ran up and tripled by the end of the year here. So huge move for Netflix. Now, a lot of the stocks that go on to be huge winners are not easy to hang on to, and Netflix was one of those. Here in June, Netflix sliced right through the 10-week moving average in heavy volume, very bad sign. Did find support down here at the 20-week moving average, but would have scared out a lot of investors. Now, the great trader Nicholas Darvis, who wrote the book How I Made $2 Million in the Stock Market, used a very simple method, and he would draw boxes. So he would take this last base here, this cup with handle base, and draw a box around it. And if the stock on the way up penetrated and sliced into that box, he would sell the stock. So he would have held Netflix through this first correction here. And he would have drawn a box around this next consolidation here. And as long as the prices did not penetrate that box, he would continue holding the stock. So this simple method earned him a lot of money throughout the years, and is a leading trait of real true monster stocks, that the boxes just kind of tend to stack up upon each other. And looking quickly now at Amazon.com, forms a cup with a handle here in '02, and then a base on base here, another cup with a handle, breaks out with the market here in March on good volume, runs up, never really challenges the buy point here, gets a little pullback here in April, May, but doesn't break into the buy point here, and runs up, almost a triple play on Amazon. Yahoo is another monster leader that doubled, actually more than doubled here in 2003, and it's set up here in a cup back in mid to late '02 with a handle here, and then did what's called a base on base. It actually formed another cup with a handle here, and then broke out with the general market here on good weekly volume and started to run up. And using the simple Nicholas Darvis technique, you can see that it was very simple to hold Yahoo up through its gains. Another stock that had a very powerful move in 2003 was Research Technology, and you can see that it formed a cup with a handle here in late 2002 and the early part of 2003, and actually formed this nice tight handle as the market was selling off in early 2003, and then blasted out early before the market confirmed here in March. E-Research blasted out on big volume and ran up over 500% in 2003 before it sliced the 50-day or 10-week moving average on huge volume, which would have been a sell signal. So massive move. If you missed the stock, it gave you another buy opportunity, and we'll show you that in a second. And the second buying opportunity came here in late March and early April with what we call a 3 weeks tight pattern. You can see that the closes on each week here are almost identical, and that's what you're looking for. It almost has a 4 weeks tight pattern here. And your buy point comes in when you clear the high of the formation right in here on good volume, and the weekly volume here was excellent. So that's a 3 weeks tight pattern, which offered you a second buy opportunity. And from here, this stock still went up to gain more than 300%. Now, these are just some of the stocks that made powerful moves in 2003. There were many more. 2003 was the start of a major bull market. And we never know when we're going to get a new bull market. They sort of come out of nowhere. So it always pays to pay attention to which stocks are acting the strongest, no matter what the market is. Usually at the end of a bear market, you'll see some stocks that refuse to break down and actually start to move higher and build bases. These are the ones you really want to keep an eye on. And when the market does confirm, you want to be the first in on these, as they're the ones that are going to give you the biggest returns, as the stocks that I showed you.